from here on, what is the trajectory that gold could be looking at? Who's buying and whether or not you should be buying are some of the questions that we are putting across to Peter McGuire from XM Australia. Peter, hi. These are dizzying heights and we've seen very strong run-up come in case of the gold prices there. How would you look at the markets at these current levels?
Well, good afternoon, Manisha. I mean, it's been extraordinary what we've seen over the last couple of weeks and very much into April. I mean, it's just been one-way traffic. I think it's taken 2,300 out a lot more aggressively than most analysts or nearly anyone, I think, really could pinpoint. It's been aggressive. It's been really to the point of parabolic. And its overall momentum, I think, has got probably legs to run yet in the short run. So let's see where it rolls over the next couple of weeks. But maybe 2,400 is where it's going to be knocking on that door very shortly.
At 2,400, are we going to start saying 2,500 or do you think there is some resistance coming in somewhere now?
Well, Manisha, it's nearly like an auctioneer, you know, going once, going twice, going three times. You might well do it. Because, look, many analysts, and you're talking to the biggest in the world, they're saying 2,500 to 3,000 is achievable this year. And you've got so many factors in the sense of rate cuts. I think there's divergence across the Fed. As some Fed members are saying you're going to see 3, 2 or 1 cuts. Everyone seems to have an opinion, but with crude at $90 a barrel, then inflation's going to take off, and that really could be a sore point for overall growth, and that could be another driver for gold.
You know, the concern really, Peter, is on who's buying these quantities, or are we looking at smaller quantities, smaller volumes and bigger exaggerated moves?
Well, I think first off, retail, Manisha, the consumption patterns across the world from consumers is very strong. So you can't say that they're not buying bullion and putting under the bed or putting it, you know, somewhere in the home as a safekeeping, because they're realizing that, you know, there's just so much momentum and gold seems to be, a store of value and everyone's got their mind's eye on it. Then you've got the paper traders, of course, buying derivatives and so on, and ETFs and whatever else, and gold miners. But yes, I think that the overall consumption is strong following on from central bank buying. The retail public are now starting to say they want a piece of the action.
Peter, from here on, I mean, as you said, 2,500 is a possibility now, 2,400 is a possibility now. Do you foresee a correction coming anytime? Are you seeing some froth building up right now? Because it's not just gold. I mean, as you mentioned, it's equities and bitcoins and real estate and various other metals and commodities also surging.
Yes, Silver's up even more aggressively in some ways, Manisha, than gold is. It's really had a gallop in the last couple of days. Yeah, look, you know as well as I do, you get exuberance into the market, you get all of that hot air, and sometimes it blows off and it just needs to have a correction. So, you know, it can easily strip out 100 or 150 bucks, but at the moment it's bullish. And there will be in that inflection point that you'll probably see some big profit taking and whipsawing. So, yeah, just hold on to your hat and be very careful as far as your stops if you're trading paper, in the sense that if you're holding gold for the long run, well, maybe you want to give it to your kids, and there's plenty of years ahead if you've got good health, Manisha.
Oh, absolutely. The kind of run-up that we've seen in just last 1 year, or let's put it in last 3 or 4 months, has been quite phenomenal, hasn't it? What's your sense now as we move forward? I mean, I understand that the second half of this year was supposed to be more aggressive, more bullish, because that is when we would actually start seeing those rate cuts come in. How is it possible? I mean, do you have that much of a vision right now on how we could be looking at gold by the end of this year?
Well, Manisha, everyone was saying that's exactly right. 23.50, possibly by, you know, start of the third quarter or approaching, you know, the fourth quarter. But it's really front loaded and it's got there so aggressively and so quickly that that's where everyone's shaking their head a little bit and going, wow, it's got all this horsepower and that may just be momentum. It's going to keep on. So that's where analysts change their expectations and go, wow, we're already at 23.15, 23.20. You know, is 2,700 the new headline that they're going to look at? So this will all happen over the next matter of weeks. We've just got to see how aggressive it is as far as that momentum to the upside.
All right. Peter, I can tell you one thing, that for India, this is a good story because we haven't seen much of redemptions come in. Not too many people are stepping out and selling their gold because they do believe that the gold prices from here as well would be on the higher side. So the recycling gold is not coming in as much. Now, the point is, if somebody was investing right today, would you advise them going long in gold, or do you think silver is a better bet?
Manisha, if you're buying physical, I think either are very, very good. I think there's probably, and many analysts are saying this, there's more upside in silver as far as the gold to silver ratio. There's an under investment in silver considerably larger than gold over the last decade. So I think, and from a consumption standpoint with industrial demand and so on, it's really got probably more of an attraction, and it's easier to buy into because it's a lot cheaper. So yeah, possibly silver has got some really strong legs ahead of it. But I think a little bit of money in both, you won't go wrong, Manisha.
Okay, a final question then, Peter. And from here, where would you or what would you put your sight on? Is it going to be the non-farm payroll data? I mean, that's on Friday. That's very near term. But for the longer term, is it going to be China and Taiwan, Russia, Ukraine, Gaza? Fed rate cuts, euro dollar parity, some people are talking about that as well in the second half of this year. What is more concerning?
Well, all of those, I mean, you can't strip one out because there's so many moving parts to this geopolitically. You've got Fed considerations, you've got interest rate policies. I'm worried about more than on one thing, and one thing very, very, very close to my heart is the price of crude. If crude was to tick up to $95 to $100 a barrel or higher, then inflation really becomes under the pump, and that's going to change the footprint as far as central banks and what they do with rate policy. So I think that it's there's so many components to this, Manisha, that can really change the footprint as far as not only investment but performance of certain asset classes. It's going to be a fantastic year of trading.
Not for the faint-hearted, I'm sure. Thank you. I said not for the faint-hearted, I'm sure, Peter.
Exactly, Manisha. That's right. Oh, I heard you. Don't worry. I'm agreeing with you. It's not for the faint-hearted, but remembering what we've seen in the last matter of months and where we've been in the last 6 months as far as gold. It's up $500. You know, it's strong buying, Manisha. The people are buying it and the attraction is strong. So I think that will continue.
Oh, it totally does that. Peter, thank you so much for joining us. Well, that's the view coming in then.